Good afternoon, everybody. We are here to cover the Fed decision, the U.S. Federal Reserve, as to whether to lower interest rates. They are expected to lower interest rates today. But there is also they're going to come out with a projection of how much they might lower them the rest of the year. And hold on one second here. And also, I mean, the Fed decision has gotten a lot of attention because of the increasing pressure on the Fed being put by President Trump and his administration. So a lot of attention being paid to Fed lately. We're going to get the decision in about a half an hour, and then we're going to have a news conference from Jerome Powell. The Fed chair is going to be giving a press conference after, so we'll watch that as well. We'll see what happens here. Maybe President Trump will post about it from the UK. Thank you for joining us, and we're going to give you the latest updates here. And I'm going to be taking your comments. You can see here, Fed expected to trim borrowing rates amid weaker labor market and Trump pressure. Traditionally, the Fed has been independent from the presidency, from the executive branch. A big reason being that sometimes the Fed has to take measures that might be unpopular for the overall good of the economy. And so, in theory, if the president of either party is in control of the Fed, they might not want them to take unpopular decisions for the long-term good of the economy. But President Trump has been very open about pressuring Jerome Powell and the Fed to lower interest rates. But they are expected to lower them today. We'll see what happens. But it's not just the announcement about what happens today. There's also going to be an announcement about how many rate cuts they expect in the future. Okay, let's see here. Hey, I want to thank our moderators, Roberts Mayqueen, Beth Mythical, over there on YouTube. Thank you for moderating there. Also on Twitch, want to thank our moderators on Twitch. Thank you. We have 13 Almo, Matthew Kohai 3. And we have with us very open about pressuring. Kay Lowry Body, Margaret Riley moderating. Thank you so much. And Shannon Davis Hughes. Linda Belk, Larry, and Misha on X moderating. Thank you. So lower interest rates makes it easier for people and businesses to borrow. A downside of lower interest rates is that it can increase inflation. Thank you to Lord Licorice, by the way. Thank you, Lord Licorice, for your support. And Mitchell Pilot. Thank you, Mitchell Pilot, for your support. All right, let's read you some background on this. And again, 27 minutes until the Fed decision is released. So you can see the Washington Post says the Federal Reserve is set to trim interest rates by a 1/4 point today, its first reduction this year, but well short of the deeper cuts that President Trump has pushed for, amid renewed questions over the central bank's independence. Policymakers last cut rates in December, followed by a pause for 5 consecutive meetings to gauge the fallout from Trump's trade and immigration policies. By the way, I believe there are 2 more meetings this year where they could cut rates. The modest cut may ease borrowing costs slightly, though it is unlikely to have a major impact on mortgages or other consumer loans. What comes next is less certain. Markets expect a string of cuts in coming months, But policymakers may opt for a more cautious approach as they confront an economy showing stagflation-like signs, stubbornly elevated inflation paired with a weakened job market. That leaves Fed Chair Jerome Powell, who we're going to hear from today, with the delicate task of signaling how far the central bank is willing to go. Suggesting a series of interest rate cuts that are coming could fuel fresh market highs, but also risk the perception that the Fed is yielding to White House pressure. A more cautious tone, meanwhile, could unsettle investors who are already counting on a string of reductions. You can see here Powell's comments at his post-meeting news conference today, which we will watch, will likely offer the clearest clues about the central bank's thinking on the path ahead. Officials are also expected to update their projections for the future path of interest rates and growth in dot plots, closely watched by Wall Street. We'll have to see what the stock market does when this news comes out. Give me a moment here. So we're going to bring you, he is not, Jerome Powell is scheduled to speak at 2:30 Eastern time. And the announcement is scheduled for 2 p.m. Eastern time. Yeah, so again, the Fed is going to be broadcasting this, but at the same time, the press it says their press conference, the Fed, is 2:30 Eastern time. Let me pull something up here just so we have it. Just so we have it here. Going to read some comments here. Maybe we'll do a poll of our viewers. What will the Fed do today? We'll give you 3 choices. What will Fed do today? No cut, 0.25 cut, bigger cut, larger cut. All right, I got to post this over here. We'll see what our viewers say. Takes me a sec to post this. No cut, 0.25 cut, big, larger cut. I messaged Facebook again about how their polls are not working. My guess is that they haven't fixed it. I haven't been able to see the poll results in Facebook for weeks now. All right, in a second, I'll show you guys what you said, at least on Twitch and YouTube. I'm going to attempt to post it on Facebook, even though I'm sure it won't work. Yeah, it's not really working on Facebook now. Anyways, I mean, you might be able to see it, but I can't see your results. Here is what you guys said. Over there on YouTube, people said, about a quarter of you say no cut, about half of you say 0.25 cut, which is what's expected, and a quarter say larger cut. And on Twitch, Let's see what they say. Let's see what Twitch says. Oops, hold on. We're going to see what Twitch says. Uh, 33% on Twitch say no cut. A quarter, 50%, about half of you say 20.25 cut and quarter point cut, and then 16% say larger cut. Lil Dusty says wishing for larger. Rob thinks the Fed shouldn't cut at all. Susie Blunt thinks we need at least a half-point cut. Justin King thinks a quarter today and then maybe another quarter in November. P.S. Fraser, our viewer, says he will cut to save the job market, but it will cause more inflation. No-win situation. Our viewer, John Q. Public, says the stock market is not the economy. In my opinion, the markets are historically overvalued at the moment. That's what our viewer, John Q. Public, said. Maybe it'll impact crypto prices, what happens today. You never know. Neil Andrew says, I hope he raises rates. We need deflation. Now, to be clear, it's a group of people who decide. I believe it's the Federal Open Market Committee, which includes the Fed Board of Governors, I believe. The Fed Board of Governors all get a vote. But it's not just Powell. Powell's the Fed chair, which puts him on the Board of Governors, I believe. All right, so thanks for voting in our poll. Let's talk about this some more. Let's give you some more background. I know it's kind of a complex topic. Bit of a niche topic, but it's important. Also, it is politically important because President Trump has gotten a lot of attention for putting pressure on the Fed, on the traditionally independent from the presidency Fed. All right, so let me just get rid of these here. Let me just read a little of this again because I think it's a helpful summary. Again, the Federal Reserve is set to trim interest rates by a quarter point today, says the Washington Post. Its first reduction this year, but well short of the deeper cuts President Trump has pushed for amid renewed questions over the central bank's independence. The modest cut may ease borrowing costs slightly, but though it is unlikely to have a major impact on mortgages or other consumer loans. The last rate cut was in December. Since then, rates have been held steady. What comes after today is less certain. Markets expect a string of cuts in coming months, but policymakers may opt for a more cautious approach as they confront an economy showing stagflation-light signs, stubbornly elevated inflation paired with the weakened job market. That leaves Fed Chair Jerome Powell, who we will hear from, with the delicate task of signaling how far the central bank is willing to go. Suggesting a series of rate cuts is coming could fuel fresh market highs, but also risk the perception that the Fed is yielding to White House pressure. A more cautious tone, meanwhile, could unsettle investors who are already counting on a string of reductions. Powell's comments at his post-Fed meeting news conference, which we will carry live today, will likely offer the clearest clues about the central bank's thinking on the path ahead. Officials are also expected to update their projections for the future path of interest rates and growth in dot plots closely watched by Wall Street. This is coming out in about 17 minutes. Some formal Fed officials warn that caution is still unwarranted, for example. Pat Harker, who was president of the Philadelphia Fed, thought a single quarter point cut made sense, given a cooling labor market, but argued there's little justification for launching a full rate cutting cycle at this time. Some former Fed officials warn that caution is still warranted, not unwarranted. So this former Fed official thinks that they shouldn't necessarily commit to more cuts, since inflation remains among the Fed's 2% target rate and isn't coming down anytime soon. The meeting is shaping up. Now, this meeting in particular has gotten a lot of attention. This meeting, it's called the Fed meeting today, is where they decide whether to raise or lower interest rates. The meeting is, or keep them the same. The meeting is shaping up as one of the most unusual in years. It follows months of Trump's attacks over the Fed's reluctance to cut rates, as well as legal questions that have left the lineup of participants in flux until practically the last minute. I believe it was several weeks ago that President Trump attempted to fire one of the Fed Board of Governors, Lisa Cook, who's one of the people who votes on the interest rates. A divided federal appeals court Monday night ruled that Fed Governor Lisa Cook can keep her job for now, turning aside an appeal by the Trump administration that sought to fire her ahead of the central bank's key meeting this week. Trump has accused Cook of mortgage fraud, a charge she denies, and has sought her dismissal. But the three-judge panel said the president violated her rights by not giving her a chance to defend herself against the accusations. The White House is going to appeal to the Supreme Court. Let's see here. Also, President Trump recently appointed a new member of the Fed Board of Governors, Stephen Miran, a Trump loyalist and top economic advisor. He is joining the Fed under unusual circumstances. He is taking a leave of absence from the White House Council of Economic Advisors rather than resigning from the role. The move allows him to return to the White House next year without another Senate confirmation, but has raised concerns among Democrats and some Republicans that he would be carrying water for a president who has demanded dramatically lower rates. So again, President Trump wants rates to be a lot lower. There's also a question of how many dissents will there be. That's going to be widely watched too. How many of the people voting are going to vote against what the majority votes for? So if they vote for a rate cut, how many don't vote for a rate cut? So we're going to be keeping an eye on that number as well. So just about 13 and a half minutes until the Fed decision. You can see that headline. The Federal Reserve wrestles with how many interest rates cuts to make and how fast. Our viewer Arkahan says no cut would be a middle finger to Trump. GC America says unelected officials with no accountability. I mean, wouldn't you think there's a certain amount of accountability in that, in how the economy performs? You may think no electoral accountability, but I mean, they are going to be seen as taking a degree of responsibility for the economy performance over the long term. Thank you, by the way, to GC America. Let's see here. So in terms of how many people vote today, I thought it was 12. I got to look this up. I thought it was the Board of Governors and 5 others. Am I wrong? Let's see. So Wikipedia says the Federal Open Market Committee makes key decisions about interest rates and the growth of the U.S. money supply. Membership. It consists of the 7 members of the Federal Reserve Board, the president of the New York Fed, and 4 of the other 11 regional Federal Reserve Bank presidents who serve 1-year terms. So I thought it was the Federal Open Market Committee that's voting, which would be 12 people, including the 7 members of the Fed board. But don't hold me to that, but I thought that's who's doing it today. Yeah, so well, don't hold me to that. Again, the expectation is that we're going to get a quarter rate cut, a quarter point cut in the rates, quarter point. So if it's not a quarter point, that's already a surprise. Also, the expectation is that there will be 2 more cuts this year. So keep in mind that. If it's something beside a quarter rate cut today and something beside 2 rate cuts for the rest of the year, that'll be surprising. Hold on a second here. Yeah, see, if you look here, the Federal Reserve posted today, press conference with FOMC Chair Powell. FOMC is the Fed Open Market Committee, and that has 12 people in it. So I think that's who's voting today. I think. We're going to be watching that live. Oh my gosh, less than 10 minutes. Less than 10 minutes until the Fed decision. Betsy's tag says it won't make any difference in the economy. We are too far in debt. Guys, 10 minutes. Now, I don't know. Where will they post the decision? I mean, I'm sure we'll see it as soon as it comes out. I'm sure we'll hear about it. But is there like an official page where the Fed like posts it? That I don't know. Matt S. says, I'm pumped. Well, no, the Federal Reserve is live on YouTube, but they're live to show the press conference, which is at 2:30. They're not live to show, I don't think they're live to show the rate decision. Well, that's their website. Maybe news and events? News and events. Either way, we'll hear about it very fast. We'll hear about it very fast. Let's see here. I was going to show you something else here. U.S. stocks are stuck on pause as the countdown ticks to a decision by the Fed, says AP. Anticipation has been building for months about this afternoon's announcement by the Fed. The decision itself will likely be an afterthought because traders and economists already widely expect the Fed to cut its main interest rate by 1/4 percentage point. What's more important will be what Fed officials say about the probability of more cuts. The unanimous expectation is they will keep lowering rates through the year and into next year to prop up the slowing job market. Reports are showing it's become more difficult for people to find a job, which could be forcing the Fed to see it, as a bigger problem for the economy than the threat of higher inflation. The Fed has been keeping rates on hold so far this year, says AP, because lower interest rates can push inflation higher. And the Fed has been worried about how much President Trump's tariffs will raise prices for all kinds of products. Inflation has so far refused to go back down below the Fed's 2% target. Stocks have run to records on expectation for easier interest rates. That in turn raises the possibility of disappointment for Wall Street if Fed Chair Powell hints at fewer cuts coming than everyone expects. Fed officials will also be releasing their projections for where they see interest rates and inflation heading in upcoming years. Wow. So we have not only coming up in a few minutes, in about 6.5 minutes, not only the announcement on what's going to happen with interest rates immediately, but projections for the future. And at 2:30 p.m., Jerome Powell. Give me 1 second here. Andrew thinks massive news is incoming. Hey, thanks so much to Blink182 Ethan. I really appreciate the memberships. Thank you. Real quick, I owe a couple thank yous here. Sky B, our member, thanks. Dookie, thank you, Dookie. GC America, thank you. GC America, GC America meant electoral accountability. Thank you. PA Jeeper 420, thank you. Lord Licorice, PH Survivor 92. Big Chief Rick, thanks for subscribing yesterday. Thanks for Big Chief Rick for subscribing on Twitch yesterday. I don't know if I got you yesterday. Jeff Brown says the Treasury bond market determines interest rates, not the Fed. I think you might mean long-term interest rates. Maybe we can talk about that after. It's a good point, but I think we'll talk about that after. I think you might be talking about long-term interest rates. Let's see here. Kavit, our viewer, says that 1 million jobs were lost, created less this year after they corrected numbers, so 0.25 cut in line. Kavit is talking about a recent, they periodically, numbers will get revised. And there was a revision, I believe a revision down in the job numbers from the past year or recent months. But I don't have time to check that right now. Maybe we can check it after, because thanks, Kavit, there's 4 minutes left. 4 minutes until the Fed decision. Joe Wiesenthal, who I follow, who does a podcast for Bloomberg and reports on finance, he just posted, "This is it. This is why we get up in the morning. This is why we're all here." Guys, we are waiting to hear what happens with the interest rates and also the projections for interest rates in the coming months and years. I'm going to keep refreshing. I'm still not sure where, I'm within seconds, I bet, of the Fed posting it'll just be everywhere. But I'm still not sure which page, like on the Fed, might show it, if that's how they do it. But we'll find out really, really quickly, and we'll let you know. The headline on CNBC right now is Fed decision imminent. Fed decision imminent. 3 minutes, guys. In big red headline on CNBC, Fed decision imminent. No, I cannot. I'm going to tell you why I can't put up the stock market numbers. You're going to laugh at me and tell me I'm weird, but I can only show the live stock market chart when I have it through like Reuters or somebody. That data is actually copyrighted data. You can't just legally steal the data and put it on your channel. Sometimes I have access to it, sometimes I don't. Today I don't. So I'm sorry I don't. But I will tell you I can tell you what's happening, but I can't have the ticker just up there because then I'm just stealing their data. So I will keep an eye on the stock market, but I don't have, unfortunately, access right now, like some days I do, to the actual ticker, live ticker. And then we're going to have many copyright experts. We have many copyright lawyers who watch the channel and then chime in on the chat with their expert professional opinion on fair use and copyright. So I appreciate you all watching today. Thanks to Lula A. Bell for your support. I really appreciate Lula A. Bell. It's not just the site, it's the actual data. You have to own the data. You have to own the rights to the data. Believe me, I've looked into it. All right, guys. 1 minute and a half until the Fed decision. 1 minute and a half. What's going to happen? Jerome Powell will be speaking at 2:30. That's when Jerome Powell speaks, 2:30. I don't even know if they're going to post it on their site or it's just going to be reported. Do they post a press release about it? That's Board of Governors News of Events page. That's also a press release page. So it might not even be posted, but I'm on their website. So again, it's widely expected there will be a quarter-point rate cut and a prediction of 2 more cuts this year. If we get other news besides that, or different than that, that's going to be a bigger story. And we'll have to wait and see. They're supposed to issue some long-term projections. Keep refreshing. All right, supposedly in 25 seconds we're going to hear this. Supposedly. And then 2:30 p.m. press conference. About 15 seconds it's supposed to come out. I'm not seeing it yet on CNBC. I'm refreshing. I might be on the wrong page. I might be on the, how about monetary policy? Refresh. I'm refreshing. Okay, it's supposed to have already happened. I'm going to take the clock off. CNBC does not have it yet. It's not on CNBC yet. Is it here? Let's see. Recent developments. Oh, here it is. There it is. I got it. FOMC statement. What do they say? Lower the target range by 1/4 percentage point. That means they lowered it by 1/4 percentage point, right? Right? 1/4 percentage point lower. I think. Okay. Now, I don't know. All right, so there's the statement. Now, yes, they have lowered it by 1/4 percentage point. Breaking news, I was correct. That is what it was expected. So, Fed cuts rates by 1/4 point. Fed cuts interest rates by 0.25%. Powell speaks at 2:30 ET. So that was the expected amount of the cut, 25 basis points. That was the expected amount. We're waiting to see what, hey, I actually was able to get it to you pretty quickly. So I'm glad we did that. We're waiting to hear. I want to change the clock because I want to change to Powell speaks in, because we're going to have live Jerome Powell in his important press news conference where he gives his long-term outlook. That's seen as very important. Powell speaks in. I'm going to make this 2:30. I'm going to update this. Let's see if this worked with the clock here. We're going to take your comments on the air. Actually, I can make it Jerome Powell. Hang on. Let me just fix the clock here. There we go. We got our Jerome Powell countdown clock. Okay. This is the first rate cut since December. So I'm going to read you their FOMC statement. Oh, by the way, how are the stocks doing? Okay. I'm going to look here. I'm going to pull up stocks just to see how they're doing. The Dow has gone up a bit. Since the announcement. I can see that right now. The Dow is up about 1% for the day, but there's clearly on the chart, the Dow has gone up a bit since the announcement. S&P and NASDAQ, they've all gone up a bit since the announcement. Yeah, David Whitworth says slightly. It's not huge. It's not a huge amount. For example, NASDAQ looks like it went up about I mean, I'm just looking here. I don't know, like 70 points or something like that. Not percentage, which is not a huge percentage. All right, I'm going to read you this second, but let me check one other thing here. Hold on a moment. Give me a moment here. Give me a moment. Let's read what the Fed had to say, and we're waiting for Jerome Powell to speak. Here's what the Fed said. I have their statement. Recent indicators suggest that growth of economic activity moderated in the first half of the year. That means slowed down a bit. Job gains have slowed, and the unemployment rate has edged up but remains low. Inflation has moved up and remains somewhat elevated. The committee that voted seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. That's their goal. Maximize employment while keeping inflation at 2%. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment have risen. So what they're saying basically is like, look, our job is to increase job growth, but to keep inflation down. And so if you lower interest rates, generally speaking, that's going to help with the job growth, but it's going to hurt with inflation because inflation is going to go up. If you raise interest rates, that's going to help with inflation. It'll keep the inflation down, but the job growth will go down. So what they're saying is, given that they worry about these two things, downside risks to employment have risen. So they're a bit more concerned about the employment now than keeping the inflation low. Because of this, in support of its goals, and in light of the shift in the balance of risks, they think the bigger risk now is not inflation. Instead, the bigger risk is lack of job growth. The committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25%. To 4.25%, but they lowered it by a 1/4%. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. That just says they're going to keep an eye out for how things are going with the economy before making further decisions. The committee will continue reducing its holding of Treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. Inflation is above 2% right now, so it's already higher than their objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. I mean, this is kind of boilerplate, I assume. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. How many voted against? Okay, breaking news. The one person who disagreed with this decision, the one person of the 12 who voted who disagreed was Stephen Mirren, who was just appointed by President Trump, and he voted for a bigger rate cut. He is the only one that disagreed with 1/4 point rate cut. Stephen Mirren, he just got appointed by Trump. He said he preferred to lower the target rate by 1/2 percentage point. So, of the 12 people who voted, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 11 voted for a 1/4 point rate cut, and Stephen Mirren, the new Trump appointee, voted for a 1/2 point rate cut. There you go. So, that's interesting. So that's the statement. We're going to hear a lot more from Jerome Powell in 21 minutes. But as you think about this, again, and I like how they explained it here, there are two big goals. One, to keep inflation down. Two, to keep employment up. Maximum employment, but keep inflation at 2%. They're worried about both right now because there's been some not so great employment numbers lately, but also inflation is above their target of 2%, and we have these a lot of Trump tariffs which could increase prices more. So, but what they've said today is based on what's happening lately, we're now a bit more concerned about the employment side than the inflation side. So because of that, we are lowering our rate by a quarter point, by 0.25%. However, keep this in mind. A couple things. First of all, I've read several articles today, including one we read, that said they didn't expect a quarter point to make a huge difference, especially in the short term. But also, the rate cut, in theory, should help some with employment, but also might hurt with the inflation. That's the benefit cost trade-off. Okay, so let me get you some reporting this. I want to take some comments on this. And in 19 and a half minutes, we're going to hear what we have not heard is what is their projection. I don't know that we've gotten their projection yet. But I believe we're going to get a bunch of projection commentary from Jerome Powell. When he speaks in 19 minutes, the market's going to be very focused on what Jerome Powell has to say, and we are going to cover that live right here. Live coming up, the Jerome Powell press conference, guys. Oh my gosh. Oops, let me do this. Let me just get something on the screen here. Give me 2 seconds. I want to take some comments from you. But what I want to do is, where is this here? I want to make sure I'm ready to bring you Jerome Powell. Okay, I think that's good. Here it is. Oops. Give me 2 seconds. 2 seconds, 18 minutes until Jerome Powell speaks. Oh my gosh. You can see right here. Look at this. Look at this. Watch live September 17th, 2:30 p.m. Eastern Time. All right, while we're waiting for Jerome Powell, I want to take your comments on what's happened so far today. Oh, now, let me update you one more thing. So you can see Reuters says Fed cuts rates by 0.25 percentage point, sees steady pace of cuts coming, only Mirren dissents. As I pointed out, of the 12 people who voted today, they all voted for a 0.25 point rate cut, except for Trump's newly appointed Fed board member, Stephen Mirren, who voted for a 0.5 point rate cut. Reuters said the Fed cut interest rates by a 0.25 point today and indicated it will steadily lower borrowing costs for the rest of the year. See, I haven't seen that yet. But I have to find that announcement. Where is the announcement about the projection? Oh, I got it, the projection. I have it right here. It says the Fed releases the economic projections. Summary of economic projections. In conjunction with the FOMC meeting held yesterday and today, meeting participants submitted their projections of the most likely outcome for GDP growth, the unemployment rate, and inflation for each year from 2025 to 2028 and over the longer run. Fine. Appropriate monetary policy. All right, so there's all these charts. What I'm going to do is midpoint of, all right, I'm gonna post a link to these projections, but then I'm gonna read you the summary from Reuters of these projections. All right, so I'm sorry I didn't get this to you. I didn't realize this was posted. All right, I just posted that link to that projections document. But what the Reuters summary of the new projections is, what you can see is, where is it here? Oh, that's the old article. We want the new article right here. The Fed cut rates, the Fed cut rates. One moment, and I'll have this for you. I promise. There. The Fed cut rates by a quarter point, we knew that, and indicated it will steadily lower borrowing costs for the rest of the year. Okay. New economic projections showed that the policymakers still see, at the median, still see inflation ending this year at 3%, well above the central bank's 2% target, a projection unchanged from the Fed's last set of forecasts published in June. The projection for unemployment was also unchanged at 4.5%, and the projection for economic growth was slightly higher at 1.6% versus 1.4%. The new projections show an emerging sense among officials that they can head off any rise in unemployment with a faster pace of rate cuts, while inflation eases slowly next year. The move to a more consistent pace of rate cuts was backed by Fed Governor Waller and Vice Chair of Supervision Michelle Bowman, Trump appointees who dissented over the policy decision in late July to hold rates steady. Okay, so Powell is speaking in less than 13 minutes. Less than 14 minutes. We're gonna bring you that live. Here, look, a little bit of a summary here. Wall Street ticks higher after the Fed indicates more cuts to interest rates are coming. The Fed cut its main interest rates for the first time this year, as was widely expected. Fed officials indicated more cuts are likely this year and next. Now, I gotta say, I'm looking at stocks right now, and all right, so since the announcement, I'm looking at the S&P, the Dow Jones, and the NASDAQ. All of them rose on the announcement, but they've basically gone back, not that much, and they've basically gone back down since they rose, okay? To varying degrees. But basically, it's like you see this spike and then it just goes down. But people are also waiting to see what Jerome Powell has to say in 12 minutes. We're going to have that live for you. 12 minutes, guys. 12 minutes. Rusty Flipper says pump and dumps. Echo says traders already sold. Thank you to Machiavelli Sucks, who thinks there shouldn't be a Federal Reserve. Thanks for your support. Thank you also to Mark Toops ATX, who says Austin market has been seeing an increase in activity the last few weeks. The falling rates motivated a lot of buyers. Too bad the Fed couldn't do a little better. Mark wanted them to lower rates more. Thank you, Mark, for your support. Klondike Hunter, thank you for your support. Who mentioned gold and silver prices? I haven't checked those. Have they changed the last few minutes? Gold prices seem to go up a bit. I'm looking at a chart right now. Looks like they went up from roughly 37.20 to 37.30 35 or something. Rusty thinks they should have raised the rates. Thank you, Rusty. Thanks to King Acorn 85, Mitchell Pilot, Nate. All right, again, about 10 minutes until Jerome Powell is speaking, about 10 minutes. Has President Trump posted about this yet? I haven't heard that he has. No, he has not posted yet. Again, Fed cuts interest rates by the expected quarter point, indicating more cuts are coming this year and next. We're waiting for the big press conference from Jerome Powell coming up in 10 minutes. We're going to have that live. We are going to have it live for you. Hey, thanks to BB. BB thinks when the Fed announces interest rate cuts, it's usually because something bad has happened. They do not cut rates out of the good of their heart. Well, what they said today is they were concerned about the employment situation. So more so than the inflation situation. So they're trying to boost employment. The Washington Post says the Fed cut rates by a quarter point today, its first reduction this year, as the economy showed signs of slowing and inflation remained elevated. A majority of Fed officials expected to cut at least 2 more times this year, 1 more than they did a few months ago. Okay. A few months ago, a majority, I guess, of Fed officials thought they would cut at least 1 more time this year. Now they expect at least 2 more cuts this year, a majority. But in a sign that the Fed is increasingly divided on the path forward, more policymakers signaled they have doubts about whether additional cuts are warranted at all this year. Oh. I wish I had a better sense of this document here. This is the projections document. Okay, so this is median projected appropriate policy path. I think somewhere on here you can find what the different voters said they would support in terms of interest rates. But I have not actually. Oh, here, look. Is this it? Assessments of uncertainty of PC inflation. Where's the graph about their projections of the federal fund rate? Forecast uncertainty. Anyway, some of you probably know how to extract that information out of here. I'm going to post the summary of economic projections again. I'm not used to reading that document. I'm going to have to look at it later. Hey, we have 8 minutes until Jerome Powell speaks, guys. 8 minutes. The Washington Post says Jerome Powell has the delicate task of signaling how far the Fed is willing to go, suggesting a series of rate cuts could fuel fresh market highs, but also risk the perception that the Fed is yielding to White House pressure. A more cautious tone, meanwhile, could unsettle investors who are already counting on a string of reductions. Powell's comments at his news conference in about 7 minutes will likely offer the clearest clues about the central bank's thinking on the path ahead. So investors, lots of people from around the world are going to be watching Jerome Powell to try to figure out what does this mean for rate cuts in the coming months and years. So this is coming up in about 7 minutes. Now, okay, hold on a second here. Let me get you something here as we wait for Powell to speak. So, the Wall Street Journal also said a narrow majority of officials penciled in at least 2 additional cuts this year. That would imply, because there's 2 more meetings this year. There's October and December. Okay, but there's some uncertainty about how many more cuts there will be this year. Oh, also, okay. I guess there are 19 people in the meeting, although I believe 12 vote on the rate cut. So the Wall Street Journal says that 7 of the 19 people at the meeting penciled in no rate cuts this year, and 2 penciled in 1 rate cut this year. So I believe of the 19 people there, if I have this right, 19 people in the meeting, 10 said there will be 2 more rate cuts this year, 7 said no rate cuts this year more, and 2 said 1 rate cut more this year. So there's some uncertainty there. There's 2 meetings in the rest of the year. Okay, hold on a moment here. Where is that? Can I find that where they said this? On this, I'd like to show you that. Anyways, I'm not going to worry about that right now. Okay, guys. 4.5 minutes till Powell speaks. Oops, you'll see it. 4.5 minutes. I want to take some more comments from you. Right now on the day, NASDAQ is down about 0.5%. Dow is up a little less than 1%. S&P 500 is basically even for the day. Ron P., our viewer, thinks that stocks are dipping because us retail and pro traders are pissed the cut was not a 0.5 point. Ron thinks that stocks will go back up in some gains before end of regular session today. Pam Burrows thinks that the rate cut was not enough today. Hey, thanks to Shaft for the memberships. Thanks to the Vladinator. Thanks, the Vladinator, for your support. Thanks, BB, for your support. I really appreciate that. Thanks to our moderators who are here. 3.5 minutes till Jerome Powell's important news conference. 3.5 minutes. We're going to have it live here. Ruth Grafasi is moderating. Thank you, Ruth. Beth Mythical is moderating. Thank you, Beth, and all of our YouTube moderators. Also, over on Twitch, we have moderating right now 13 Almo, Big Ball of Yarn. I Got That Fire, Matthew Kohai 3, and Sarah, thank you. Also, Divine Empire, thanks for subscribing on Twitch. Big Dog Gaming, thanks for your support on Twitch. Also, our Facebook moderators, Kay Larry, Body, Margaret Riley, Paul Anderson, Shannon Davis Hughes, thank you. And Linda Belk, Larry, and Misha, thanks for moderating on X. Thank you. Oh, I got the video from the Fed. Oh my gosh, I got the video from the Fed already. Look at this. Wait a second. I didn't realize I had it. Let me get it on the screen for you. Where is it? I need to put it on the screen. I'm putting it on the screen for you right now. I'm sorry, I didn't realize I had it. I didn't realize I had it. Where is it here? There it is. Look, there it is. You're looking at it. Oh my gosh. Oh my gosh, it's live. Live in Washington, D.C. Waiting for Jerome Powell. Two-minute warning. 2-minute warning. Fed Chair Powell speaks after Fed cuts rates by 0.25%. Oh my gosh. Get ready for Jerome Powell. Markets are going to be watching. He's going to take questions, I believe. Get ready for Jerome Powell. Get ready for Jerome Powell. And then we'll take your comments after. Thank you, I am Charlie, who thinks they should have cut by 0.5%. All right, I'm going to take my clock off the screen. We don't need my clock anymore because we know he's coming out. John C. says, government official, that's on time. Yeah, this is going to start pretty much on time. It's 2:30 right now. Is that him? There he is. Let's hear what he has to say.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 0.25 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of this slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Miron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Okay, and then just as a quick follow-up, I'm sorry, can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation. And actually, the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off, and that tells you that it's time to take that into account in our policy.
So just looking at the SEP once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since really since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that, though, right? We have to. Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, You'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? You know, that's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having really a great discussion around these challenging issues. So.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to to always trying to do better.
Neil.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college, and yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of, the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there are just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy, that's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that. But over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities, and I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets, and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. We're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right, guys. Well, we heard from, there we go. We heard from Jerome Powell. Oops, I got to take my clock off. So, again, summary, the Fed has cut rates today by the expected quarter point. It's unclear what they will do in coming months. There is a bit of disagreement in the Fed about how many cuts are needed in the rest of the year. So we'll talk about that. I want to take some of your comments. And, just keep in mind, as Jerome Powell said, the Fed's two goals are to keep inflation down. I believe the target is 2%, while maximizing employment. And what he said right now is there's no obvious thing to do, because inflation is above 2%, but there are also some concerns about the employment situation in the U.S. And so what he basically said was that given the recent data about the labor market, about the job situation, a bit of concerning data, they are moving their focus more to a balance between focusing on inflation and the jobs market rather than having it more focused on inflation. So they have lowered the interest rate a bit, which in theory should help with the job market and help spur the economy, but it also risks raising inflation a bit. So we're going to talk about this, take some of your comments on the air. And, I want to change the headline because he's not speaking right now. So let's say Fed cuts interest rates by 0.25%. More cuts possible this year. And if I can show you this, I found the dot chart. Is it called the dot chart? I think it's called the dot chart. If it's not, it's something like that. But I finally figured out where that was in the document that the Fed posted. Here, look. There it is. So if I'm reading this right, okay, you see the dots? Look at this right here. FOMC is the group that votes on the interest rates. 12 people. Their assessment of appropriate monetary policy. So basically, this is, each dot is, it's not just 12 actually, it's 19 people, 12 of them vote. So each dot is one of the 19 people at the meeting. And so, for example, this is 25. So everybody at the meeting says, this is what I think the appropriate interest rate level would be by the end of the year. And this is the 2025 one right here. So remember, right now, I think before today, it was between 4.25 and 4.5. So it was right here at the start of today. And right now, it is between 4 and 4.25. So one cut is considered a quarter point, okay? So what you can see is 10 of the 19 people say they think that by the end of the year, it should be here, between 3.5 and 3.75. So basically, 10 of the 19 people said, and there's 2 more meetings, but 10 of the 19 people said that there should be 2 more quarter point cuts by the end of the year. 2 of the 19 people said there should be 1 more quarter point cut by the end of the year. 6 of the 19 people said there should be no more cuts than happened today by the end of the year. 1 actually said that that the interest rates basically shouldn't have been cut today, that they should just stay the same as they were before today, which would be between 4.25 and 4.5. And this, I'm going to guess this is Stephen Mirren. One person is way different than the others. It looks like it to me. One person thinks there should be another full point cut before the end of the year, which would be a half point in each of the 2 meetings. I'm going to guess that's Stephen Mirren. Stephen Mirren is the person who President Trump just appointed to the Fed. He just recently took his seat. Of the 12 people who voted today, 11 said, let's cut rates by 0.25%. 1 of them said, let's do something different. 1 of them, Stephen Mirren, said, let's cut it by 0.5%. So I'm going to guess this is Stephen Mirren. I'm not sure. I'd be shocked if it weren't. But whoever that person is, I'm guessing it's Stephen Mirren. Now, maybe it says here in somewhere. I can't tell from this graph. But whoever that person is thinks there should be a whole other percentage point cut by the end of the year, which would be a half point in each of the next 2 meetings. Okay, so that's, and then you can just see in coming years, each of these dots represents where they think they should be at on the interest rate scale. I'm going to post a link to this document. This is page 4, I think, so you can look at it yourself. But something as a takeaway from this, what you can see is 7 of the 19 people that actually, 7 of the 19 said they don't anticipate supporting more cuts, at least as of right now. Maybe things will change in the next 2 meetings. 2 only would support 1 more rate cut in the next 2 meetings. 10 would support, is it 10 or is this 9? 1, 7, 9. I think this is actually 9 right in here. That's 9 said they would support 1 more cut in the next 2 meetings. And then this one, possibly Stephen Mirren, said they would support 2 half-point cuts in each of the next 2 meetings. Okay. Nate says that's 9. Yeah, I'll confirm that that's Mirren. I want to check in an article. Some of our viewers are saying it is. Okay, so I want to take some of your comments here, but I guess I am not, as I'm sure you can tell, I'm not a financial news expert and not a finance expert. But these numbers, and from what I can gather from what Jerome Powell said, he said we're in a meeting-to-meeting situation or something like that. It's not clear what's going to happen with interest rates the rest of the year. Also, obviously, they're going to be looking at the data. If the inflation data changes unexpectedly, if the jobs data changes unexpectedly, that could change what they do as well. Okay. And I also have not seen a comment. One of our viewers in the chat said something like that they thought that President Trump would not be happy with today because he would have wanted more. Well, what we do know is that President Trump's appointee called for a half-point cut. He was the only person of the 12 who voted who did. So I would not be surprised if President Trump posts eventually on Truth Social and says he wishes they cut more. But we'll have to see. By the way, a quick thanks to Jennifer Keller, our new member. Ruth Krafasi, thanks, Ruth, for moderating and for your support. This Child's Life, thank you, This Child's Life. I appreciate it. Also, Michaela Henderson, our new member. Jude, our member. Got me some thinks Trump is going to be mad. Sydney, thanks for the memberships. Thank you, Tim Glenn, for your support. Also, thank you to, I owe some thank yous from while the press conference was going on. The Demon Dog, our member. I Am Charlie thinks Powell should have cut 0.5%. Thank you, Schaff, for the gift memberships. And also thank you to Who Shot JR on Twitch, Larry Picklejar on Twitch, and the Lost Alien. Larry Picklejar gave a subscription to The Lost Alien. Thank you. Kraken the Cold One on Twitch, thank you. Jim Meconius on Twitch, thank you. Divine Empire as well, and Big Dog Gaming. Some of our viewers mentioned this. I did want to mention real quick. I saw this before, this report right here, which is Alert Page, who I follow, which is a very good source of, they monitor various scanners. So I found them a good source of breaking news. They said that in York County, Pennsylvania, there's a report of multiple injured officers. Several medevacs requested initial reports of an officer-involved shooting incident, at least 2 officers being transported. I don't have the details on that right now, but if I get more, I will certainly let you know concerning report, and I hope they are okay and can recover the officers. But I will keep an eye on that and let you know when I have updates. Yes, Governor Shapiro posted he's been briefed on the situation involving law enforcement in York County. Yeah, I don't have I don't have much more detail on that right now. Again, I'll keep an eye on it. I will keep an eye on it and let you know what I hear about while we're covering this. Okay, I want to take some more comments on this story that we have been covering. We just heard Jerome Powell speak. You can see Federal Reserve cuts rate for first time this year. Matt says Powell is out next year anyway. So Jerome Powell's term as the Fed chair ends in May, and President Trump has said he's going to replace him. Jerome Powell, however, is still, I believe, on the Fed Board of Governors until 2028, if I have that right. He was actually asked a question today about whether he would consider leaving the Fed in 2026. I assume that means leaving as a governor, and he didn't really have a comment on that. But my understanding is that his term is up as a Fed chair in 2026, but I believe his appointment to the Fed Reserve Board of Governors, which would allow him to vote on the interest rates, goes until early January 2028. Pepper Moon thinks inflation is going to go up for sure. Misty Ray, our viewer, says, Trump needs to stay out of the Fed business. Trump's job is to talk to retailers and get prices down. Retailers are making huge profits, says Misty Ray. Now, that's what Misty Ray says. I will say it was one interesting thing that Jerome Powell said is he said, and he says this is a pretty common view, he said that the tariffs for now seem to be mostly paid by the importers. So, for example, like there might be a chain of stores that brings in goods from overseas and then they sell them to consumers. What he said is the pretty wide view is that most of the tariffs are being paid not by the consumers, the end user, and not by the original producer, but by the people bringing this stuff in. But he said that there's that what's expected to happen more in the future is that these costs will be passed on to consumers. So, for example, that stores will start, who bring in goods from overseas and then sell them to consumers, they'll start raising their prices more. That's what he said is the expectation. However, if I heard him right, they're expecting the tariffs to be like a short-term pressure on inflation, but not expecting it to be a more long-term inflationary pusher, stimulus. I don't really have the specifics on that. I'm not a finance expert, but something they're keeping an eye on. Generally speaking, they're keeping an eye on various things. They're certainly not committed to lowering interest rates or not lowering interest rates more in the next two meetings this year, which I think are in October and December. So we'll have to see what they do. Also, who knows what new data comes out? You know, there might be unexpected unemployment data, unexpected inflation data, and that's going to affect what they do. But keep in mind, they say it again and again. If you want to know what they're going to do, just keep in mind their two mandates are the two things they're trying to do are to keep inflation down, and it's already above what they want it to be, which is 2%, and they want to maximize employment. So as the coming weeks happen and you hear more financial news, if you want to know what they're going to do, think about, well, what are we hearing about unemployment and what are we hearing about inflation? If you start hearing worse inflation numbers, then they're going to be less likely to lower rates. If you start hearing worse job numbers, they're going to be more likely to lower rates. What I'm going to do real quick is just check for a second, because I even haven't had a chance to check it. So there was a shooting. Some officers were shot, according to reports, in York County, Pennsylvania. And I did just want to check the scanner for a second and see. I don't know what's on the scanner right now. I just heard about this a short while ago when we were listening to Jerome Powell. So if you will allow me to do this, let me pull up the scanner here and see what's going on and see if we can get any updates about what's happening. Again, I'm not sure. There was reporting about this close to an hour ago, so I don't know what the status is right now and how much we'll currently hear on the scanner. There's actually two scanners, so it's possible that at the scene, things are dealt with at the scene, and you're not going to get much more news on the scanner from the scene. But let me just see I'll put it on, and for a second. and I'll see if we hear anything. And I will check for you and see if I can get you any updates on that as well, because that came out while I...
Sure. Truck 39 responding with 3. Is this non-emergency response?
I heard about this from Powell was speaking. Well, now we have two things.
Nobody's answering the door requesting assistance with entry.
All right, we'll respond non-emergency unless they request otherwise.
Copy, 1537.
Let me see if I can get you a quick update on this. The governor did post about it. Hold on a moment here. Sorry to interrupt the other coverage, but I would like to give you an update, if I can, about this. Well, there's not, as you can hear, there's not much on the scanner right now. So WGAL, which is a Pennsylvania, I believe is a Pennsylvania news outlet, they say that there's an active police incident. Governor Shapiro said he's heading to the scene. There was about an hour and a half ago was when the first call about this incident came in. Again, there are reports that several officers were shot. I think I'm going to turn off the scanner because at the moment I'm not hearing much on the scanner. But I'll keep an eye out for updates. But for now, again, I'm not surprised there's not much on the scanner, given that the first call about this incident came an hour and a half ago. I'll be checking my messages. Some people might have messaged me stuff about this as well. One of our viewers, Fume, says it was to exercise a warrant. I cannot confirm that. I would not be surprised. Unfortunately, it's not a rare occurrence when an officer gets hit and or shot, hurt or shot when a warrant is being served. I can't confirm that's what happened today, but I mean that I do read about and hear about that kind of thing. It's not a rare occurrence, unfortunately. So I'll let you know if I have confirmation about that. Regarding the Fed decision today, let me show you something about that. You can see Fed cuts key rate for first time this year. This is the first cut, AP says, since December. Look, we talked about this. The central bank's focus has shifted quickly from inflation, which remains modestly above its 2% target, to jobs, as hiring has ground nearly to a halt in recent months and the unemployment rate has ticked higher. Lower interest rates could reduce borrowing costs for mortgages, car loans, and business loans, and boost growth and hiring. Fed officials also signaled that they expect to reduce their key rate twice more this year, although there were a number of people who disagreed with that in the meeting, but just once in 2026. Before the meeting, investors on Wall Street had projected 5 cuts for the rest of this year and next. Stocks wavered a bit as Powell took questions from reporters. Just as we said, just one policymaker of the 12 voting policymakers dissented from the quarter rate cut decision. Stephen Miran, whom President Trump appointed and was confirmed by the Senate in a rushed vote late Monday, just hours before the meeting began. Miran preferred a larger half-point rate cut, but Powell told reporters there wasn't very much support for a bigger size cut among Fed officials. Many economists had forecast there would be additional dissents, and the meeting's outcome suggests that Powell was able to patch together a show of unity from a committee that includes Miran and 2 other Trump appointees from his first term, as well as a Fed Governor, Lisa Cook, whom Trump is seeking to fire. This is also interesting here. Check this out. It is unusual to have both weaker hiring and elevated inflation at the same time. The Fed is facing both a challenging economic environment and threats to its traditional independence from day-to-day politics. At the same time that hiring is weakened, inflation remains stubbornly elevated. It rose 2.9% in August from a year ago, up from 2.7% in July, and noticeably above the Fed's 2% target. It is unusual to have weaker hiring and elevated inflation, because typically a slowing economy causes consumers to pull back on spending, which lowers price hikes. So it was interesting to hear. Powell said this is an unusual situation. Normally, it's clear that you're focusing. It's clear what to focus on. Either the inflation is the problem or the hiring is the problem. At this point, it's not really clear which to focus on because inflation's a bit higher than they want it to be, but hiring numbers have been concerning lately. So they have adjusted their focus kind of more to a balance from focusing more on the inflation target, he said today. AP points out that Trump's attempted firing of one of the Board of Governors of the Fed, Lisa Cook, is the first time a president has tried to remove a Fed governor in the central bank's 112-year history. President Trump says she committed mortgage fraud. The attempt has been seen by many legal scholars as an unprecedented attack on the Fed's independence. President Trump's administration has accused Cook of mortgage fraud, but the accusation has come in the context of Trump's extensive criticism of Powell and the Fed for not cutting rates much faster and steeper. President Trump and members of administration have for months been very vocal and very negative about the Fed, and Jerome Powell said they should be cutting rates more and faster. I mentioned just a few minutes ago, we talked for a number of minutes about the reports of several officers shot in York County, Pennsylvania. When I get some kind of major update on that, I will certainly let you know. Our viewer Huckleberry thinks the politics are more important at the moment. Regarding the Fed, you're saying? Where is this here? Hold on a second here. Hey, let me just show you something real quick. I actually have the Dow Jones ticker I can show you. I can show you the Dow Jones ticker. I'm going to put it on the screen for you so you can see. Give me one moment here. Give me one moment here. I'm putting up the Dow Jones ticker. Some people had asked for it before. I have it now. What it actually is this it right here? Let's see. That's not it. There it is. Oh, I need to shrink it. It's going to be too big. It's going to be too big. Hang on a moment. Right here. Here is the Dow Jones ticker. Should be the ticker. Why is this like this? Oh, now it's finally moving. Okay, there you go. I don't need the sound though. There we go. TBM said we had a mini rally. Just so you know, NASDAQ is down about a 1/4 point today. S&P 500 is about even for the day. And the Dow, so what you can see, all of this movement here, you see how it goes, I believe right here, I believe it went up initially here when the initial announcement came out. Yeah, it says 2 o'clock, 2 p.m. So that is when the Fed first came out with their announcement about the rate cut. And then while Powell was speaking, it went down a bit. And now it's kind of back to where it was before. I mean, at least the Dow, for whatever it's worth, is pretty much back to generally where it was before the Fed even announced their announcement today. So I guess my point is, as a non-financial expert, it doesn't seem like actually for today there's been a huge overall move in the market from before the Fed news until after. Fern says they are all pretty even. Give me a moment here. I'm checking some of the messages people have sent in. Checking a couple other things here too. Yeah, I don't have any updates right now on the shooting, reported shooting of multiple officers in York County. I don't have updates for you. If I get updates while we're on the air, I'll certainly pass it along to you. The Reuters called this a normal-sized rate cut today. They say that They say the rate cut, along with the projection showing that 2 more quarter percentage point reductions are anticipated at the remaining 2 policy meetings this year, indicates Fed officials have begun to downplay the risk the administration's trade policies will stoke persistent inflation and are now more concerned about weakening growth and the likelihood of rising unemployment. In the press conference, Jerome Powell, chair of the Fed, said in the near term, risks to inflation are tilted to the upside and risk to employment to the downside, a challenging situation for monetary policymakers. Treasury yields were little changed after the Fed announcement today. Also, I mean, a big thing is that investors assume what's going to happen. That's when you hear Jerome Powell say that what happened today is baked in, or somebody says that it's baked into the market. The widespread assumption today was that they were going to make a 1/4 point rate cut, and from what I understand, their projections they issued were not incredibly different than what it was expected. So, the market already had the people who invest in the market are assuming a basic idea of what's going to happen in the future. It doesn't look like what happened today from the Fed was a huge shock to people and really changed their expectations that much, which, you'd expect the market to go up or down if what happened is very different than what people thought. From what I can gather, it's not so different than what people thought was going to happen. Link Storings thinks that other October jobs numbers will be a market mover. The market closes in 4 minutes, by the way. I might put the volume on so you can hear the closing bell. I just turned the volume on. It's the live volume from the NYSE. Somebody in YouTube just mentioned ads. I want to say this again. I don't know if something changed with the YouTube chat. I do not put ads in the middle of the streams. I don't do mid-roll ads when it is live. That's intentional. I don't do the thing where an ad takes over the broadcast stops and an ad comes on. Some people, I think, have said in YouTube in recent weeks they got ads, I think, in the chat or something. I don't know where that's coming from. I apologize if you're getting it. There's nothing I can do about it because I literally don't have them turned on for the middle of the stream. So I'm sorry if you did get one on YouTube. People a week or two ago started saying this out of nowhere. I don't know where it's coming from, but it's not coming from me. I haven't changed anything. That is the policy I have. Somebody said it covers the chat or something. So I'm not. I don't have an option, a separate option from chat ads. I can guarantee you though that I have turned off mid-roll ads on YouTube. I don't have them on because I don't want to interrupt the broadcast. JC says, I get them on the chat column only. I'll have to look into it more and write to them. But again, nothing I've changed, and I don't have it turned on. The market is closing in 2 minutes. You're going to hear the closing bell in a second. The Washington Post called the rate cut today a well-telegraphed cut. The Washington Post says, though President Trump has pushed for dramatically lower interest rates, saying it would juice the economy, what comes next may not be clear-cut. Markets anticipate a string of cuts in the coming months and into 2026, but policymakers may opt for a more cautious approach as they confront an economy showing stagflation-light signs, stubbornly elevated inflation paired with a weakened job market. Yay! Did we hear the bell? Maybe they rang the bell and we didn't hear it. So there we go. Oops. We got to play you the bell. One other thing I wanted to mention, I hadn't heard about this today. I want to mention this real quick. This I had not heard about. One of the viewers just mentioned it. Thanks for mentioning it. Hang on one second here. The singer, it's a story involving the singer David. It's spelled D4VD, pronounced David. Very popular singer and songwriter. TMZ reports that a young girl's body found in the Tesla of singer David has the same tattoo on her finger that he has on his finger. I just heard about this story right now. I'll have to look into that right after this stream. I know some of you might not have heard of David, but he's actually a very popular singer. For example, he has over 2 million followers on Instagram. So anyways, what is this here? Oh, and also I do want to, so I'm going to keep an eye on that. Also, there's some video right now coming from the UK, from Windsor, England. Let me just throw this on the screen for you. President Trump is with King Charles right now. I know it's not about the topic. Let me just put it up there for you so you can see it. I'm seeing it. One of the viewers, thanks for mentioning it, mentioned this is going on right now. So I'm going to put it up there for you. Hold on a second. Hang on a moment. Hang on a moment.
Mrs. Trump,
This is live.
The bond between our two nations is indeed a remarkable one. Forged in the fire of conflict, it has been fortified through our shared endeavours and burnished by the deep affection between our people. Tested time and again, it has borne the weight of our common purpose and raised our ambition for a better world. So, in renewing our bond tonight, we do so with unshakable trust in our friendship and in our shared commitment to independence and liberty. Therefore, as we celebrate this unparalleled partnership, allow me to propose a toast to President Trump and the First Lady, and to the health, prosperity, and happiness of the people of the United States of America.
I just wanted to show you this footage because it's live and it was happening right now. So, looks like they stopped the volume during the national anthem. We'll see if President Trump speaks. Thanks, by the way, to Sean TV and Satoshi's limo driver, Kimberly Barr, member for 50 months. Thanks, Kimberly. Jennifer Keller, our member. Also, Who Shot JR, and Jim Aconius, thank you. Let's just see if we hear from President Trump. You might have already said something. I mean, I wasn't covering that continuously, so, but let's see what happens here. Let's see what we hear. Again, the volume cut when the music started playing, so I assume tomorrow the volume will come back. Volume? Hello? Anything? Right? I didn't turn it off, I don't think. Oh, there we go.
Your Majesty,
here's President Trump.
Melania and I are deeply grateful to you and Queen Camilla for your extraordinary graciousness. And to William and Kate, thank you so much. It's been so great being with you today. Thank you very much. Appreciate it. It's a singular privilege to be the first American president welcomed here. And if you think about it, it's a lot of presidents, and this was the second state visit, and that's the first, and maybe that's going to be the last time. I hope it is, actually. But this is truly one of the highest honors of my life. Such respect for you and such respect for your country. For many decades, His Majesty the King has epitomized the fortitude, nobility, and the spirit of the British monarchy and the British people. He's dedicated himself to preserving the glory and unique character of this kingdom, restoring life to the rivers and streams, supporting the works of its artists and composers, planting trees and gardens in its countryside. And I just visited one of the most beautiful I've ever seen that you just completed, and protecting the architectural integrity of cities, villages, and towns. He has uplifted the poor, cared for rural farmers, and tended to wounded veterans like nobody else. I'll tell you that I just stood in line and shook about 150 hands, and the King knew every single person and every single company, and some of them had bad names like XYZ-Q3, and he knew every one of them, or at least I think he did, because nobody was complaining. I was very impressed with that. But I just want to say that His Majesty has also raised a remarkable son in His Royal Highness, Prince of Wales. Really amazing. We've gotten to know you, and I think going to have an unbelievable success and future. Melania and I are delighted to visit again with Prince William and to see Her Royal Highness, Princess Catherine, so radiant and so healthy, so beautiful. It's really a great honor. Thank you. Many years ago, His Majesty opened his archives to a biographer. Among the documents was a letter from 1993 in which he described the patriotism and guided his many projects. He wrote that he was, quote, entirely motivated by a desperate desire to put the great back into Great Britain. In the finest tradition of British sovereigns, he has given his whole heart, everything he's got, to those parts of Britain that are beyond the realm of mere legislation. It's not easy, but which define its essence and its virtue, its harmony and its soul. It's an amazing calling, and there's nobody that's answered that calling like you have. A fifth of all of humanity speaks, writes, thinks, and prays in the language born on these isles and perfected in the pages of Shakespeare and Dickens and Tolkien, and Lewis, Orwell, and Kipling. Incredible people, unbelievable people like we have rarely seen before, probably won't see again. The lion-hearted people of this kingdom defeated Napoleon, unleashed the Industrial Revolution, destroyed slavery, and defended civilization in the darkest days of fascism and communism. The British gave the world the Magna Carta, the modern parliament, and Francis Bacon's scientific method. They gave us the works of Locke, and Hobbes, Smith, and Burke, Newton, and Blackstone. The legal, intellectual, cultural, and political traditions of this kingdom have been among the highest achievements of mankind. There's really never been anything like it. The British Empire laid the foundations of law, liberty, free speech, and individual rights virtually everywhere the Union Jack has ever flown, including a place called America. You know that place very well, don't you? His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship. But seen from American eyes, the word special does not begin to do it justice. We're joined by history and fate, and by love and language, and by transcendent ties of culture, tradition, ancestry, and destiny. We're like two notes in one chord, or two verses of the same poem, each beautiful on its own, but really meant to be played together. The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable, and we are, as a country, as you know, doing unbelievably well. We had a very sick country 1 year ago, and today, I believe we're the hottest country anywhere in the world. In fact, nobody's even questioning it, but we owe so much of that to you and the footing that you gave us when we started. Together, we've done more good for humanity than any two countries in all of history. Together, we must defend the exceptional heritage that makes us who we are, and we must continue to stand for the values and the people of the English-speaking world, and we do indeed stand for that. On behalf of all Americans, I offer a toast to one of the great friendships, to two great countries, and to His Majesty, King Charles III, a very, very special man, and also a very, very special queen. Thank you very much. Thank you. Thank you very much. It's a great honor to be with you.
Okay, so we got to hear President Trump speak. Thanks to the viewer who mentioned that was going on. I didn't even realize that was happening right now, so I'm glad we got to bring that to you. That's kind of a bonus thing we threw on the air. Hold on a second. What is this? Oh. Hey, hold on. There's one other thing going on. I don't know if I have video of this. Give me a moment. Give me a moment. The Washington County Sheriff is speaking about the Charlie Kirk shooting, and I do not know if I have access to that. So I'm sorry about that. I just saw that right now. Give me one moment. They're not posting it live. Let me check a couple things here. Yeah, I can't just steal it from some other news outlet. Just to be clear, I can find it. That's different from being able to show it to you. So I didn't realize that was happening, but I will keep an eye out for what's being reported about it. Yeah, I have not heard any update about what's going on in York County with the apparent incident where apparently some officers were shot. I don't have an update on that, and I have not seen an update on that. I will let you know if I get an update while we're on the air. I don't have one right now. Let me just check something right now, real quick. Let me check this, see if I can hear what they're talking about. Looked like maybe they were taking questions. Let me look at, I'm going to do. Let me listen. I think I want to just listen to what the Washington County Sheriff said at the start. I know we're way off topic now, but before we wrap up here, since we're on the air anyway, let me just see if I can take 2 seconds and listen to what the sheriff said right at the start to see if there's anything big. And I haven't heard any reporting that there was some big new announcement from the Washington County Sheriff. Give me 1 second here. Hold on. So I believe what the Washington County Sheriff is talking about right now, from what I can gather, is the process by which he was taken in, by which Tyler Robinson was taken into custody. I believe that's what that's about. I'll have to keep an eye out for it. I'm sorry, I didn't realize that was coming, but I don't have an easy way to show you right now. But by the way, Intel Doge, who I follow, says the former Pennsylvania Auditor General said multiple police officers were shot in this incident in York County today. Yeah, so I know we kind of got off track with we covered the interest rates. we've kind of just talked about a couple different things since then. So look, I think here's what we're going to do. I don't really have updates right now on the thank you TK, by the way. Thank you TK. I don't have updates about what happened in York County at the moment for you. Looking at a couple different stories here, I'll keep an eye on what the Washington County Sheriff is saying. I think from what I could see, it was focused more on him being brought in, but I have to go back and listen to it, honestly. But for now, we came on the air to cover this story. So soon I'm going to start cover the interest rates, which now the headline's all messed up because I changed it before. Let me just. Put that up as a placeholder. Oh, and by the way, one of our viewers mentioned the newspaper York Daily Record, which I believe is a York County newspaper, is saying that that scanner traffic indicated reports of multiple fatalities. That's what they said. Scanner traffic indicated reports of multiple fatalities. They said Pennsylvania State Police are not releasing information at this time. So that's what they said. They said scanner traffic indicated reports of multiple fatalities in this incident. I don't even know if that would be... also, they said that earlier scanner traffic indicate officers had been injured in the incident. So again, I will keep an eye on it. For now, what I'm going to do is I'm going to wrap up this stream right now because we came on to cover the interest rates, and we did that, and we showed you the announcement. We showed you Jerome Powell's press conference, and we talked about that and took some comments. If there's a story in and of itself that we need to cover later today, I'll come on and just do another live stream about it. But for now, I'm going to wrap up this live coverage, and I'll keep an eye on the other things, and who knows, maybe we'll come on later and do another stream. But I appreciate you guys being here for our coverage today, and I very much appreciate you sending in your comments, and also people have been sending me news updates as well. So again, I don't have the rights to show right now the Washington County, Utah Sheriff press conference. So I can't just steal it and show it to you. If I did, I would just put it on, even though it wasn't the topic. But I'll check out what was said after the stream. If there's updates to post, I can post them. If there's some huge news, we'll do another stream. Also, I will post updates on my X account, which is @Lookner. @Lookner on X is where I post updates when I'm not on the air. So you can follow me over there, and if you want, subscribe and follow the channel, Agenda Free TV. We cover all kinds of live breaking news without an agenda, Agenda Free TV. But again, I do appreciate you being here for the coverage, and thank you for continuing to sending me news updates and also letting me read your comments and questions on the air. I also really appreciate our moderators who have been here. Thank you so much to all of our moderators. We could not have our chat rooms without our moderators. For example, on YouTube, Beth Mythical, Ruth Krafasi over there on YouTube, and all of our other YouTube moderators. Linda Belk, Larry, Misha on X. On Twitch, I Got That Fire, Matthew Kohai 3, and Sarah. And on Facebook, and all of our other Twitch moderators who've been there on Facebook, Paul Anderson, Kay Lowry Body, Shannon Davis Hughes, Margaret Riley, and all of our other Facebook mods as well. Thank you for moderating over there. And also, did I get everybody who supported the channel today. Thanks so much for your support for the channel. I very much appreciate that. TK, I thanked you before. Thank you, TK. Also, Barbara Horrigan. Oh, I'm glad you guys got the mugs. Barbara, thank you so much, Barbara Horrigan. I appreciate that. Also on Twitch, Drunk Can't Cook, thanks for subscribing. Timido1, thank you. Timido1, Guy from the 207 as well. Who mentioned, oh yeah, I did see that there were some people, I believe, who were arrested. A guy from the 207, this didn't happen 5 minutes ago, but there were some people who were arrested in the UK after images of Trump and Epstein were projected onto Britain's Windsor Castle. I don't really want to get into that in detail now, but if I can show you a headline, I'll show it to you. Yes, right here. Hold on, I'll show you right now. Here's the headline. 4 arrested after Trump Epstein images projected onto Britain's Windsor Castle. 4 people were arrested on Tuesday following a projection of images of Donald Trump alongside sex offender Jeffrey Epstein onto the Royal Windsor Castle, where President Trump is being hosted by King Charles. These arrests happened yesterday. Before he arrived in the UK, there was a banner unfurled on the castle. The banner unfurled near the castle with a photograph of Trump and Epstein, and later they projected several images of the two onto one of the castle's towers. For example, you can see right there's a photo from Reuters right there. So one of the viewers mentioned it. I just want to mention it. That's not from today. But we were talking about the castle a few minutes ago, so I figured I'd mention it. And we showed you Trump speaking at the state dinner tonight at Windsor Castle. I would suggest turn on the notifications. Turn on the notifications for the channel. I would suggest we have our own notification system. It works really well, so you can get sent a notification whenever we go live. We have our own notification system. We do it through Discord. It's easy to sign up. The mods will post a link to the notifications in the chat. Also, the link to the free notifications is in the description of this video on YouTube and Facebook as well. So sign up for those. Another great way to find out when we're live is follow us on X at Agenda Free TV. I always post there when we are going live, and I post updates about the channel there at Agenda Free TV. And also, for those of you who watch on, thank you to our Discord mods for all you do, by the way. Thanks, Discord mods. For those of you who watch on YouTube, I would suggest turning on the YouTube notifications. Those can be helpful to tell you when we're live. To do that, it's a little tricky. What you need to do is you need to subscribe to the channel, then click on this bell here, and then choose all notifications. If you are already subscribed, make sure you've clicked on the bell and you've chosen all notifications so your notifications are on. I want to shout out our Facebook subscribers who subscribe and support the channel over there, like Robert Rial II and Sharon Klassen Goslin. Sorry it took me a while to get to this. I'll try to get it earlier next time. Thank you, subscribers on Facebook. Sharon Klassen Goslin, Kay Lowry Body, Margaret Riley, Shannon Davis Hughes, Lou Knight, Diane Allworth, and Michael Clayton, and all of our other Facebook subscribers. Thanks for subscribing there. Oh, and thanks so much to Margaret Riley for the Facebook stars. It's very kind of you, Margaret Riley. Thank you. Thanks to all of our Twitch subscribers who subscribe and support the channel. Oops. Guy from the 207, Devil Doc, Drunk Can't Cook, thank you. And Wall Street and Shaggy and Cece. And also Douthis, Jack's Haku, Jack's Animals, and Aaron Weirdo, thanks for subscribing over there. Sorry if I'm missing people in the Twitch chat. I reset it for a second, which makes it harder to see people for the moment, just for a moment. So I'll check over there in a second for more. But thanks to all of our Twitch subscribers, also our YouTube members like CAC813, Crypto King, B. Bunuds, Evelyn in Maine, Justin King, Grace G. Ski, Ethereal Planet, Val Cargo, Sticky Frog, CAC813, thank you for being members, Bolo, Sentosi, Mama Yoli, Joel Holgan, Waltham, Holstrand, Ronald Kame, Babs, Thomas Darwin, and all of our other members as well, Corey Carroll, Babs, June 0130, thank you. Rocky Coast, thanks for subscribing as well over there on Twitch, and all of our other viewers. Sarah Smile, Juliana Martin over there on Facebook, Shelly Atkins, thanks for watching. Crypto King, thanks for subscribing. Simon G, thanks for watching. Leslie Springstead, Christine Gagnon, Sparky Pilot and Calligram, our members. Tina Marie, our member. Trail Chapters, BF, thanks for watching. And all right, we're going to wrap up this live stream. Solid Fox, Gina Pina, thanks for watching. All right, so again, if you missed it, you can go watch our coverage. We had the Jerome Powell news conference if you missed that. And I will certainly keep an eye out for other news coming today, and we may have more news coming up tonight. Okay? All right, so that is it for now. Oh, by the way, the Washington County Sheriff said, I just saw this, he's speaking now. According to Matt Finn from Fox News, the Washington County Sheriff said that Lance Twiggs, who is the roommate of Tyler Robinson, the suspected shooter of Charlie Kirk, the roommate who also, according to authorities, was in a romantic relationship with Tyler Robinson, he is in a safe space very far away from St. George, Utah. So he's in a safe space very far away, according to the Washington County Sheriff. I just saw that update from Matt Finn from Fox News. All right, that is it for now. Thank you for watching, and we will see you soon with more live breaking news coverage right here at Agenda Free TV.